Starbucks Corporation faces steep challenges as business strategies and innovation misfire. In an unprecedented downturn for the coffee giant, Starbucks Corporation, SBUX, witnessed its stock price plummet by 12% in pre-market trading, following what many analysts are describing as a disastrous earnings call. The call has reignited concerns over the company's strategic direction, reminiscent of troubles it faced a decade earlier, and highlighted significant operational and innovation challenges. The earnings debacle reflects deeper issues within Starbucks, as outlined during the unsettling revelations from the recent quarterly earnings discussion. Under the leadership of CEO Laxman Narasimhan, who marked his first year in the role, Starbucks has tried to introduce new strategies and product innovations that have so far not resonated well with its customer base. Among the criticized new initiatives is the lavender latte, which, despite management's hopes, has failed to capture consumer interest. This product and others like it have drawn criticism for their taste and concept, suggesting a possible misalignment between Starbucks' research and development efforts and customer preferences. The company's attempts to diversify its beverage lineup with additions like drinks containing beads or pearls for texture, along with zero-sugar options, have similarly been met with skepticism regarding their operational implementation and market appeal. Starbucks' efforts to cater to a broader daypart by targeting the evening crowd have also been questioned. The brand's identity is strongly tied to morning coffee rituals, and its move to transform into a destination for nighttime or happy hour gatherings has been seen as a strategic misstep by some observers. The performance in international markets, particularly in China, has been another pain point, with Starbucks facing steep declines amid increased discounting efforts. This downturn in a previously booming market for the company suggests a significant setback in its global expansion strategy. Industry analysts, including Jefferies' Andy Barish, have voiced concerns over the company's current trajectory. Barish pointed out that while broad consumer tepidness on discretionary restaurant spend is a factor, the primary issue seems to be the recent menu innovations which simply haven't been received well. He suggested a strategic pivot back to core menu items and enhanced focus on value, promotional strategies, loyalty programs, operational improvements, and targeted marketing could help realign the company with its consumer base and market demands. As Starbucks gears up to introduce further new products this summer, the pressure on CEO Narasimhan continues to escalate. If these initiatives fail to stabilize the company's performance, there could be significant implications for his continued leadership. Observers suggest that without a noticeable improvement, Narasimhan may find his position increasingly precarious, as stakeholders could push for leadership changes to restore confidence and strategic focus. Looking ahead, Starbucks faces a critical period. The company must carefully evaluate its approach to innovation, ensuring it aligns with consumer expectations and operational strengths. Furthermore, a reinvigoration of the brand's core identity and offerings could be essential in overcoming current challenges. As Starbucks attempts to navigate these turbulent times, the broader industry will be watching closely, using the company's experiences as a lesson in balancing innovation with core business strengths and market realities. The upcoming quarters will be crucial in determining whether Starbucks can regain its footing and restore its reputation for consistent growth and market leadership.